Ladies and gentlemen of the crypto space, we're live on a Monday, September 12th at 2:16 p.m. with apparently pretty shitty bandwidth. So we're going to do the best we can today and try and tell a bit of a story. Had a wonderful chat this morning with the Blockmates crew. Obviously, that hit on all of the narratives we talk about on the stream, but let's try and have a conversation this afternoon about some of the more specific things we talk about and try and hone in on the things that we like to look for in assets, especially in a world where liquidity is tightening beyond belief. We're at historic limits. We are at resistance levels that are rarely seen, or at least seen only, at least historically speaking, at the time of some sort of pending crisis about to occur. So let's hit the macro for 2 seconds. We'll look at the 10-year, we'll look at the Dixie, and then we'll fold it into what I like to look for in assets, which is obviously a topic of conversation we talk about a lot. The 10-year is at ridiculous heights, not historically speaking with regard to the numerical value. We're at 3.35%, but what's pertinent is trend and structure. So we're above November 2019 highs in yields, and 2018, was basically pivot territory, but they're not pivoting at the federal level, the Fed level, because of what they're perceiving to be interest rates and the upward pressure on consumer prices. And obviously over here in September of 2019, this is where the United States banking system completely failed from a cross-bank liquidity perspective. Then the entire system decided to go risk off early in 2020. Most folks don't see the correlation between the two, but this was obviously a lead up. This was an extraordinary event in September of 2019 that is not talked about as much as it should be. But we're at extreme territory right now with regard to structure. Let's zoom out to the monthly and you'll see. It's obvious. It's insane from a market structure standpoint. It's almost at the point where we have a structural change occurring. I mean, this is 41 years of history, and this is a significant deviation with regard to trend structure, especially if we get over this white resistance line at the top here. That would be like this. Let's say you got a trend line somewhere over here, and that would be like in 2010, 2011, punching through resistance. It's such a significant deviation from the trend. The only logic that I could potentially think of to justify this behavior is that obviously there's the dollar bond dynamic, whereas sovereigns get into a difficult enough of a situation where they have to liquidate reserves in order to buy dollars. So that you see in the charts very clearly when you have bond yields going up correlated with Forex markets, dollar, not denominated, but dollar versus euro, for instance, and the dollar value going up. Dollar appreciation, selling debt to buy dollars. That's not what's occurring today. So this is either a case where they're selling it and there's excess dollars that are compensating for the dollar demand, and I'm not at the point where we're invalidating that correlation. Bond yields up, buy dollars, but we would have to see a breakdown of these support moving averages to have some sort of confluence to suggest that. But there's also the narrative where if consumer price inflation is expected to remain high in perpetuity, why would someone hold bonds? They're just going to guarantee to lose money. So obviously from a sovereign financial structuring perspective, you need diversified collateral. But there's plenty of wild arguments that can be had and conversations that can be had about maybe something else is more meaningful as a collateral in a changing world, a changing global financial climate. And it's not really too wild to entertain such conversation. At some point, such a significant structural change is probably destined, whether it's now or in the future. But obviously, if we see a significant breakout to the upside here, 4, 5, 6%, and then the dollar goes down on the DXY, and we see resistance hold here, we start to see these moving averages break to the downside, that is very depictive of something extraordinary occurring, where large holders of U.S. debt, they're selling it because they're not outperforming CPI. And it's a whole other story internationally, because obviously consumer prices are relative to the currency of denomination in the respective country. So that would be wild. All in all, we're definitely at a crossroads of some kind. Maybe bond yields are lagging. The dollar reverses here, and then bond yields have topped. So maybe the dollar, or at least in the DXY presentation, along with, let's say, right down the pipe, 10-year yields, they remain correlated, and the 10-year yields are lagging, and they're going to start to come down. So the dollar has topped, yields have topped, and we start to see a reaccumulation of U.S. debt for national reserves around the world, which is exactly the cycles that the U.S. wants, because as other countries accumulate U.S. debts, that gives us the capacity to offload inflation, to export it, to export our debt so we could finance fiscal deficit spending. We could issue more debt because the world is buying it. But you can only buy it if the rest of the world, you can only make it, the rest of the world is buying it, because if you keep making it and you keep selling it and you keep driving interest rates on the 10-year up, and especially long duration 30-year, how are you going to pay the interest rates on 5, 6, 7, 8%? So at some point, too high an interest rate on our debt leads into what Luke talks about. And when you have a sovereign debt crisis, you can't finance fiscal spending using deficits if the world isn't going to buy your debt. So that is a conversation that is something it's on the table always. And there's a reason why Luke talks about it. There's a reason why I like to mention that Luke talks about it. If we see that, we're closer to this historic trend structure than we were in February. I mean, could you imagine? If we're talking about bond yields going to 4 or 5% when it's at 1.8%, yeah, but now it's at 3%. It's not that far from 5%, which would still only be 2009, 2007 yield territory for a 10-year. It'd be a structural change in the print of this chart. And especially considering how much debt is out there compared to 2007, paying 5% on debt. There's so much more of it, so the number isn't what's pertinent. It's the overall debt distribution, debt quantity story that is currently in play. So obviously it's late in the day. We'll see how many folks trickle in, but had a fun convo this morning with the Blockmates crew. As always, that's just what we talk about. We talked a lot about macro and how I like to talk about the crypto space in terms of macro. And I'm not one of those macro persons in the crypto space that says, holy crap, look at the macro situation. Everything's going to come crashing down. You got to own only dollars. No, that's not the benefit that macro gives us. The benefit that macro gives us is a capacity to understand these systems in terms of traditional macro financial products and services, and the way capital has been created, how capital flows historically, and the nuance of the systems that have been created in the crypto space that do what old systems historically did, but do them in nuanced, new ways, innovative ways, creative ways. And especially the most interesting thing that I like is value. Pure play investments. What is a pure play value? So I like this title. Value investing is the history of investing. Historically, back before the financialization and perversion of the entire financial system, used to invest in a stock based on its earnings. and based on its price to earnings ratio. And if it was a stock that had great earnings and maybe there was a contraction in global liquidity and their price to earnings was less than one, but it was a business and enterprise that had constant demand, maybe it was a consumer staple, and it's just price to earnings was suffering because of overall liquidity. Maybe there was a lot of sell pressure because people had a debts to service. Just speaking hypothetically about probably a variety of instruments over the last 20, 30, 40, 50 years. Um, that was a great investment, P/E of less than one. So the same applies to a crypto asset just like it would any other equity. What kind of earnings does it has if evaluated from a corporate perspective? How much cash flow is going through? What's their debt load? What's their infrastructure costs? What's their real estate costs? What's their human resources, their insurance obligations for their staff and persons? And that's why the crypto space is absolute fire. There's no debt obligations. There's no DevOps. There's no real estate. There's no insurance. There's nothing. All there is pure cash flow and distribution of that cash flow to interested parties that have decided to purchase a piece of that cash flow. This is the epitome of a pure play value opportunity, unlike anything that could ever be structured from an equities perspective. What is it with REITs? I think it's 75%. By charter, a REIT must distribute like 75%. Maybe it's 90%. I don't know. Someone could Google it. Let's say 75 to 90% for point of the story. They are chartered to distribute 75 to 90% of their income to REIT holders. That does not diminish a REIT's capacity to issue new stock, new shares to dilute the user base to achieve a capital raise such that they could expand business operations to purchase more properties to increase their cash flow. In turn, that would pay out more persons, but the complexity there in my mind is they do it on an opportunistic basis. There's people, humans on a board that come up with these choices that we really don't have a vote on. So I'm not fond of the traditional structures, especially as we've been exposed to what has been created in DeFi over the last 2 years. I'm much more fond of deterministic behavior. And it's as simple as that, meaning there's no reason to say there's not great opportunities from equities land. There's a whole strategy, and you can always be methodical, evaluate debt load, see if their board is reasonable and rational, and maybe it's a shipping company, of which I just happen to buy a piece of a shipping company, and maybe it's a REIT that owns server farms, and there's plenty of those, and maybe it's a REIT that owns commercial properties, because clearly that's in a shitty situation if you own commercial properties out in California. That doesn't seem like it's a great set of properties to have ownership of. But there's plenty of reasons that 90% cash flow could be meaningful. The burden there is trust of the board to not issue shares, to dilute the shareholders, to inflate the share quantity for purposes of a capital raise. Now, it's as simple as that. I prefer determinism. I prefer to know exactly what the issuance of tokens in this instance will be at any given time, at any time during its emission schedule. Now, the vast majority of reasonably defined tokenomics in the crypto space, which is really just a share issuance policy, is disinflationary. There's less and less inflation over time. Now, there's been countless experimentations over the last couple of years. There's been deflationary monetary policies. There's been hyperinflationary monetary policies. And then there's been monetary policies that should have likely succeeded but did not for a variety of external factors. Now, really, what capital investment requires is a holistic digestion of not only what hopefully is a good monetary policy, but it also is where the monetary policy fits into the enterprise and where the enterprise fits into the ecosystem and where the ecosystem fits into the macroeconomic setup. So it's all related. You can have the most incredibly hyper-deflationary monetary policy where there's literally 1% less tokens in circulation per day, but if no one's buying the damn tokens, you don't have a supply-demand balance that's price appreciative. Or maybe it's just hyper-deflationary and there's just less tokens, and then it's still a capital gains play where it's adversarial and you still have to buy and sell at an opportunistic time. And does anyone really want to play that? That's not a value stock. That's a growth. But it's not a growth because it's not really dealing with a commodity or an enterprise. It's just the tokenomics. And this was that reflexive type tokens. We've seen those reflexive tokens where every transaction, a little bit of it was burned. So there's potential for that monetary policy from a deterministic standpoint, but it still needs enterprise. And that leads us really into, the evaluation of what has survived. Oh, what has survived the insanity of 2022, where the federal government of the United States withdrew liquidity from the financial systems. The Treasury stopped printing their treasuries. The Fed stopped buying the treasuries and monetizing debt, and liquidity really was drained, or especially started to be drained from the system, especially as they raised interest rates, which means it costs that much more to service debt obligations, especially variable interest debt obligations, and it takes that much more to take out new debt. You see what happens with mortgage rates at 6%. It basically collapses all new people getting mortgages. So there goes the growth there. And if there's no lending, there's no velocity. If there's no velocity, there's no new capital in the system. There's no currency expansion as per commercial bank double entry accounting. So you have liquidity contraction. So what has survived 2020 in the financial conditions that I just described to you? And I would say that the few things that have survived are quite meaningful. And the hardest thing to really get a grasp of these markets is not missing out on an opportunity. You're not missing out on something that's going to change everything. This is not a market where you're going to get multiples on your money. Maybe a couple of few folks are able to capitalize on multiples, but that's purely an adversarial type of situation because we're very much in a zero-sum situation. I'll explain. Why are we in a zero-sum situation right now? Do you see liquidity expanding? No. Whoever is achieving a capital gains in these market conditions, they're taking from another person because there's no new capital coming into the system to replace capital that was acquired via capital gains. So what you want to see with regard to a growth environment is more of a capital inflow. And the whole analogy that I draw on with regard to emerging market capital flows, because then you could capitalize in that fashion and it not be a zero-sum game, because new capital has come in to replace the capital that has been acquired by individuals. So fewer people owning a larger quantity of the overall capital in the system. But I'm still, even during a high liquidity period of time, I'm still not in favor of that type of behavior. And now historically, especially everyone that's on the stream today knows that we've engaged in that kind of behavior before. We've been adversarial. We've done capital gains where we've seen a trend structure, a formation, and we're able to see it break out, and we get whatever we get selling the breakout. And, I will always entertain that type of potential market opportunity, and I'm very much looking forward to a high liquidity market condition where we could discuss those kinds of opportunities on our forum, and we will engage with them rationally, more rationally than ever, but I will still continue to encourage persons to act more value-oriented rather than adversarial, to take from the many to accumulate by the few. And I think it's healthier to participate in a market based on value assessment. And it's very historically the way Buffett always talked, and that's why I like that type of investor mindset. And You just want to buy cash flow at a discount, and it's really as simple as that. Um, so let's circle back and look at the title and see if I could have any more thoughts about this. A pure play. So pure play is interesting. Um, there's been spin-offs of commodity producers like mining companies of late, especially in the last 3, 4, 5 years for like pure lithium. Um, and pure something or another, and it gives you a pure play for a type of investment. Now, in equities land, that's almost always growth oriented. You're literally investing in the stock price and hoping other people buy after you buy so you can take their money. That's the whole nature of capital gains. But what I love about the crypto markets is there's a pure play value investment that doesn't exist anywhere else. Pure play in financial activity, capital flow in banking and forex markets. You can't even begin to have these types of words used in a conversation about opportunities in equities. It just doesn't exist. I tell everyone about giving Bank of America $1 million and €1 million and tell them, here, give me 0.025% of all transactions. Go make a market. They would laugh at you. They wouldn't even know where to begin because there's no such thing as a product or service that they could offer to you to do anything like that. And that's why the crypto space is quite extraordinary. I mean, historically, to be a market maker, you had to be licensed and do all the bullshit registrations to be on the floor of the New York Stock Exchange wearing a nice blue coat, and now you could just go on Uniswap and be a market maker. Now, obviously, you could do things similar with just options, and it could be argued that uh, structured structured products and options can achieve the same financial behavior as that can be achieved with an LP on Uniswap. That's great, but that's still being a market maker on Uniswap. You're still buying and selling around a particular price point. So that's meaningful because you cannot do that in traditional finance. You are permissionally given access to a system to do a behavior that is profitable, that can be profitable, that you cannot do anywhere else other than the crypto space. And to me, that's extraordinary. And to me, that's why all my attention's here. All of it. Now, there's exposure in other places. I got 10-year bonds that have been absolutely annihilated. One of my largest losing positions is 10-year bonds. This thing just goes down in value, which is quite extraordinary. Not much else to say about that. It's unfortunate, but it's telling a hell of a story, at least. I've done a good sacrifice so I could tell a good story without losing a couple $1,000s on bonds. Aaron's in the house, Tapsy's in the house. We successfully summoned Noah from the nether. Yes, it was a very busy day. I had a very busy day. I'm exhausted, but at least I could crank out a good story for you guys. Now, the Ethereum merges this week. It's like Wednesday, give or take. And it is the largest disinflationary currency collapse that is predetermined to occur deterministically for a currency of its size. It's larger than currencies of actual countries, and it's going to have a disinflationary collapse. And I expect extraordinary events to unfold. That does not necessarily directly translate to price appreciation of Ethereum. Price appreciation has to do with supply and demand balance. What I can say is that we are going to experience a supply collapse. One of the largest supply collapses of currency in modern history. And we'll see how the demand holds up. In the case that there's constant or increasing demand facing supply collapse, the knock-on effect is price appreciation. Now, bear in mind, price appreciation is also price depreciative, meaning as the price goes up, people are less inclined to buy things that are more expensive. And this is the whole argument against consumer price inflation and how CPI is actually deflationary. Inflation is deflationary, as some very smart people have stated. So we'll see how that dynamic plays out literally this week. So this is probably one of the most exciting weeks I could think of in a long time, which is very welcomed considering the market climate, the state of capital in the market, and everything that's going on, this is a very exciting week from a monetary policy standpoint, especially because it has nothing to do with human choice. It is programmed. It has been programmed to do this years in the making. Everyone agrees that this is the behavior that they want, and this is the behavior that is going to occur, and it's not like, 85%, 80%. We're going to judge based on supply and demand how much disinflation we get. No! It's going to be disinflationary. Guaranteed, deterministic. That's hot. No one is going to tell it what to do. It's going to tell people what it's going to do. That's hot. Crypto Plato's in the house. Dan's in the house. Crypto Jake. Breakless Rider. Year-end thoughts on potential deflationary F post-merge. Well, deflation there's a distinction between deflationary versus disinflationary. So we know for a fact a disinflationary event is going to occur. And we see that numerically and it's dependent on gas prices. So depending on the cost of operating on the network, if we go out to all time, let's go out to daily. So based on the daily, so it looks like we're going to have a complete disinflationary collapse where there's basically zero inflation. So we're at 13 gwei right now, guys. 13 gwei, and on the daily average, we're at 0.1% inflation per year. So fun fact, this is going to be probably a complete inflationary collapse. Inflation is completely implode. Complete disinflation down to basically 0% inflation. But then if you zoom out to all time based on the average load on the network, we're talking about minus 1.5% deflation on a yearly basis based on 403 days of history with the IP 1559er. Now that is speculative. We'll see how, load on the network plays out into the future. But we're at 11 gwei right now. And on the daily, it's at 0.1% inflation. Iran, this shit is going to be crazy. Now, I don't care much for the price because I personally believe that every single asset on the Ethereum mainnet is basically a derivative or a long on Ethereum itself. If Ethereum decides to do what everyone kind of would hope it does, then everything else is going to do exactly what you think it's going to do. That's the way that works. So it's going to be a very interesting week. One Curious View, good day, good day. Jeremy, updated thoughts on synthetics. Synthetics is hot. I have said the statement that all roads lead to GMX on Arbitrum and all roads lead to synthetics on Optimism, and all roads lead to Curve on Ethereum mainnet. And I think those kinds of statements are absolutely reasonable. And we'll see what plays out with, a curve narrative versus Uniswap, so on and so forth, which gets the most liquidity, which gets most capital flow. We're all speculative territory in that regard. But there's one thing that Uniswap does not have that Curve has, which is an extraordinary monetary policy. It's a meaningful monetary policy of which Uniswap has zero. There's zero history, there's zero lendiness, there's zero adoption, consumption. There's nothing at all going on whatsoever with Uniswap. The token, does nada. So it doesn't even do uni. It does zero. Uni as in one. So it doesn't even do one thing. It does no things. So Curve has the Curve Federation. So that's a whole nother ballgame. All roads lead to Curve with regard to monetary policy on mainnet. We'll see what happens with the price point. Everything's all about price point. And price point tells a heck of a story. So we keep our eyes on these charts, especially this week. And is my eyes really going to come off these charts? It's not going to happen. So we'll have plenty of stories to tell. One Curious View, did he catch game theorizing take on the merge? He says it's overhyped. Well, hyped is a subjective interpretation. It's irrelevant. What's pertinent is how I describe it. Because, on this stream, I'm the captain and we only talk rational. And I'm neither hyped nor not hyped. I am expecting extraordinary things from a monetary policy standpoint. It is impossible, it's mathematically impossible for nothing to occur in a hyper disinflationary collapse. That's just it's such a shock to the system something has to occur. It's like deficit spending if the United States collapses 90%. That's essentially what emissions are. It's kind of deficit spending. It's the creation of new currency. But in this instance, it's literally going to zero. So this is going to be interesting. Hyped, obviously has a variety of interpretations. Price appreciative. I don't know what the heck people are getting hyped about. Uh, I'm not. I wouldn't speak from a price standpoint, but I speak from a monetary policy standpoint. So this is going to be a crazy week in that regard. Hey P, how are you? Mom's not good. She's no, she's not in danger, my friend. She needs to be at home with you, and we've talked about this many times. I appreciate how devastating this is going to be, my friend. And I shared with you a brief story about how I kept my mom at home, and she's gone now, and God rest her soul. And the best decision I ever made was to keep her at home, to be with me and family. So I wish you the best, my friend. I know it's going to be a devastating time for you. Nothing's going to make this better. Nothing's going to help. It's just going to be the hardest thing you ever go through in your entire life. And I say that from personal experience in a very, very similar situation. My mom passed of emphysema. So she basically lied in bed suffocating to death while I held her hand. That's mom. Love you, mom. See you soon. Hopefully not too soon. Jeremy, yes, I love the take by you. I hope it helps friend Eduardo. What application do you use to see gas in the upper bar of your computer? That's Frame. I use Frame, which is replacement for MetaMask. Umberto, hey Noah, do you have any concerns about the merge? I'm excited about, worried about it at the same time. Well, I'm both excited and worried. I'm excited because I know what hyper disinflation does, and I'm worried because I know what hyper disinflation does. It's going to be a true shock to the system. It is going to be an extraordinary shock to the system, and for nothing to occur, that would be strange. Jeremy, some have advised moving assets from DeFi to SEX until after merge. No, that doesn't seem to make much sense. Now you're welcome to. I don't see the need to do that. This is an environment, an ecosystem that has a tremendous amount riding on it, and we've had very successful testnet merges. Why would the whole point of testnet merges is to be prepared for mainnet merge? So they've done the due diligence. We've seen the behavior in testnet, and we're about to see the fruits of that labor and the fruits of that testing in the mainnet release. I expect the merge to go completely smoothly, and I expect the monetary policy to play out as expected with a hyper disinflationary event. Angelo, I'm a bit concerned on replay attacks of FPOW doesn't change chain ID. Angelo, FPOW is dead on arrival, completely dead on arrival. There is zero liquidity, and the stablecoins don't exist. So the stablecoins have zero value, which means basically everything has zero value. It's worthless. What has emerged in DeFi is value because of dollars and liquidity inflow. It's this chart. This is why what has occurred in DeFi has occurred. Dollars flowed in, just like an emerging market, which has given dollar value to other assets that are paired and traded against dollars. So I wouldn't give even 1 second of thought to the proof of work fork. There will be zero value on it. If anything, it will be completely scavenged. If anyone buys anything, they're going to take dollars out as soon as they can. And they're going to sell anything they can. There's no chance for anything. There's no dollar value. All the stablecoins are worthless. They're not honored. Therefore, they have zero value. One curious view, shadow forks have indicated you don't need to do anything. That's correct. You don't need to do anything. Tapsy, I love the quiet contemplation, but I also like the deflationator hype man Noah version. Deflation! Deflation! I get hot. I get excited about this stuff. I know, P, that's a lot of capital, friend. Uh, I, I know you don't have enough. I understand. This is I understand how difficult it is, my friend. I wish everyone could have fairy tales and happy endings, but believe me, there's a lot of people that ask for capital every day. and I try my best to help as many as I can. One curious view, more chance Ethereum Classic becomes next dominant proof of work over a new fork. Yeah, but it's irrelevant. What's pertinent is Ethereum Classic has bridges for stablecoins. And Ethereum Classic, I believe, has integration into multi-chain. But what you need is the same experience you had with Phantom and Avalanche. You need capital flow over to Ethereum Classic. You need exchange activity, you need liquidity, you need velocity, you need currency creation. There's no Aave over there. You know, the most exciting thing, you watch Aave. You watch double entry accounting, currency creation, mechanisms to get a sense of where capital is flowing from a cross-chain standpoint. And that gives you a good heads up to a market that you could potentially capitalize upon. And obviously, from an overall standpoint, this is a great chart that shows us where liquidity is across the entire system. Last question today, guys. Raul, thought you would not stream today, given you already had a podcast with Blockmates. Yeah, but let's get some additional content in. We got a crazy week, and I don't necessarily know if I could be here Wednesday, so I'll give you guys a little bit of clarity heading into the largest disinflationary collapse of a modern currency that I could possibly think of. So this is an extraordinary week, and you guys need all the rationality and all the clarity that I could possibly give you. But last question for today. Love your content. I've been watching for a while. Do you still hold your Ren dark nodes? Do you think Ren is still a favorable position? I do have them. They are very much quiet. I know that Ren and WBTC is the on-ramp for Bitcoin into DeFi. WBTC is significantly larger than Ren BTC. Ren BTC is only a small fraction of that. I don't know where it goes from here. So that doesn't mean much with regard to my choice to still operate the dark nodes. They pay for themselves. If they become something, yay. If they don't become something, all right, it happens. So my choice is to do nothing rather than something, which is something I've done with Atom. Atom, I bought it at like $1.50, and now it's it's done well. It's over a 10x there, and so I'm very content with the directionality of Atom, Polkadot, and I like my Ren dark nodes, some of these old positions, and we'll see what happens to them. I have no idea where they're heading, and this has never been a stream about hoping or expecting the next big thing to break out and do a lot of price appreciation. This is more so focusing on value investing and how do you engage these markets sitting back and relaxing instead of trying frantically to figure out what the heck is the next big thing. We try and do things differently around here, boys and girls. I agree saying more chance than FPOW. I have no idea what the heck's going to happen with the forks, but I have literally zero interest in any of the forks. Hey, Noah, have you ever visited Australia? Great. I wish at some point. We'll see how things go. I very much wish to be a world traveler at some point. If anything, my wife would love to do things like that. It's much a pleasure, as always, ladies and gentlemen of the crypto space. Monday, September 12th at 2:54 p.m. As always, thank you all for joining me. Tell everyone to subscribe, because I can only help people if they actually hear the words. After party on Discord for the most rational community in the entire crypto space. So I wish you all a wonderful day. If I don't catch you before the merge, be patient. The odds are less is more. The odds are not much is needed. You've been preparing for this for years. That is the way I like to think about things. There's nothing to do right now that shouldn't have been done last year. And you adjust accordingly. We've been talking about how to adjust over the last year. All of 2022 has been how do you focus on survivability? And that's really where we are. You just need to survive until liquidity starts to flow in, which is exactly what this chart is. And this is not a period of time to really try and outperform, to find the opportunity. This is a time to find the foundation, the infrastructure. And when the liquidity flows, the infrastructure is going to do everything you want it to do. Y'all have a good one now. I will see you next time. Peace.